Hey guys, Mike here. So it was a very interesting day in the market to say the least. I mean, we expected what we got because it was quad witching. And I believe, if you look right here real quick, we had $4 trillion in options expiring today. I mean, just amazing to see the amount of options that are expiring every quad witch. And I swear it's like going up every single time we do it. And a lot of those were in the AM where you saw a lot of volatility. And I thought what was really strange, we're going to get into the charts and really what the heck is going on, because like Apple struggling, Tesla hit a new 52-week low this morning. And one thing that was happening was the Qs went positive like right out of the gates, and then but S&P is down, SPY is down like 1% or more. And I thought that's strange because I looked at QQQ divided by SPY, risk versus more value, right? And it was like people were taking on risk. And I'm thinking, well, that's weird. If you're expecting like a major sell-off or earnings to be bad and rates to keep going higher, it's not like you're going to try to drive into the QQQ stocks. I mean, that's mostly like 85% tech, I believe, now at this point in time. And so that was really weird. And the Qs sold off later on, but it was just very strange. And I don't know what was going on with that. Again, the VIX is broken. It's red, even though the S&P is red again after its big pop yesterday. But the market started to recover, which we expected volatility. And then we got the US SP Global PMI out. Shockingly, I can't believe this, down 44.6. Of course, estimate was 46.9, so not even close. Manufacturing fell 46.2 versus 47.8. But then the weird one was services. Services also fell to 44.4 versus 46.5. And this is the biggest downturn in business activity since May of 2020, when we actually had the world shut down. And if you look over here, you also had new orders, which, I mean, come on. New orders at this point in time is down to recession area. Like, once we cross the line, you can see right there, there's 2008, there's the dot-com bubble. So, yeah, I mean, we're getting down there. It's not looking pretty at all. This keeps on declining. Obviously, we've been past zero for quite a while now. And if you're new here, please hit that subscribe button. Really appreciate it. And if you're getting anything out of this, please hit the like and think about sharing the video, guys. And so when that news hit, that's when we really started to sell off. And we knew at some point in time we were going to get a bounce, but we just didn't know when, because, I mean, it always happens, right? And so what's happening on the S&P is pretty simple, actually. You end up, I got to put this in the Discord this morning, you got a double top going on. It's playing out. What's happening now? It's filling this gap that we hadn't filled since the beginning of November, right? So we're finally probably going to get that gap filled down to 38.18 is what a lot of people think is going to happen. You see the RSI looks sickly down there. We hadn't seen it this far down since we had the sell-off, actually, or heading downwards, since the sell-off in July. And then if we just add the moving averages, you can see, once again, I told you when you keep breaking them, so we broke the 200, the 100, now on the daily we're breaking the 50, right? So this was kind of that last line of defense to save us from the gap. And you can see what happened. We end up getting bought back up at the end of the day here, and it brings us right up underneath this 50 moving average. And of course, if you just look at the RSI on the hourly, you can see we were sold off. You can see we end up getting oversold on the RSI. So of course, here comes the bounce. That's what usually happens. MACD starts to roll up. And so, we know we're going to get a bounce, just don't know when at this point in time. And there's that week I told you to watch out for, right? So setting a new low right there in the middle of the gap. Most likely that is going to fill. And, you look back at July, and I'm just saying, man, it looks pretty much almost identical. If you check out the RSIs, where they were at then, where they're at now, you look at this MACD right there. Looks like it's getting ready to try to roll over on the weekly. It's the same exact setup. Like I said, this has been the most orderly so far sell-off I've ever seen. And even if you look at historical charts, never seen anything like it. And we'll get back on that in just a second. But I also want to show you Apple. Remember I told you that trend line is important. It opened up below it this morning. And if we go back, you can see this trend line right here. As you can see, there's still underneath it when we close the day. But it goes all the way back to, May of 2020. And so it's bounced off it multiple times. And the S&P is going to go how Apple goes, right? So the found support at 134. There's a little support there. We break that. Basically everybody's saying timber down to 125 or something, and then maybe below that, depending on how soft or weak the market actually is. And so you're just seeing a lot of stocks like, Tesla's setting a new 52-week low. All the big FANG stocks right now, a lot of them are just hanging on for dear life at this point in time, waiting for the bounce, which we always get, because, again, coming into year end, you got people, basically tax loss harvesting. You got the fund managers at the last minute trying to reallocate money to here and there and position themselves to go into 2023, which is maybe that's what was going on when I saw the Qs go positive and the S&P was down. Not really sure about that, and it's hard to prove it. But again, don't know what's going on with the VIX, and so. Are we surprised? No. Again, this is, if you look at any historical chart, it's been the most orderly sell-off ever. I don't know, and I think a lot of that has to do with options, right? And if you look at this chart right here, 44% of S&P 500 options in Q3 and Q4 so far expire within 24 hours. Look at that big jump there from Q2, Q3, and Q4. Compare that to any other year going back to 2011. And so, like I said before, options are running this market, man. They're putting it in a direction it's going to go, and that's just the way it is. And I'm seeing all kinds of stuff come across my desk in the morning time, looking at it. These way out of the money puts, mega millions of dollars worth of them coming through, and those people are making a lot of money because they're pushing this market down a lot, doing that. And then eventually, when it starts to bounce, we'll either hit the, I didn't even look at the Fibonacci retracement levels yet, but we'll hit the 50 or the 618 and look, we bounced. Oh my God, it's bullish again, right? But like we were talking in the Discord today, which was, and you're hearing a lot about this, the narrative will have to change eventually, because this usually happens, right? Where it's like, oh, it's all about the Fed. And, because used to what happened was when you had bad economic data come out, that was actually, oh, look, the Fed, they're gonna have to stop tightening as much, right? And so the market would bounce all of a sudden off bad economic news. Now, all of a sudden this week, what are you seeing? It's selling off on bad economic news, right? It's not doing that. And so eventually the narrative has to go from the Fed softening, pivoting to, oh, it's all about earnings. Like, it has to eventually get there, right? And that's usually, I think it's the last phase or third phase of a bear market. And, when you look at that, maybe that's what's happening, right? People aren't expecting Q3, especially Q1, to be that good at all. And so maybe they are going to start pivoting in that direction where actually real bad news for the economy is bad news for the stock market, right? And so that's something, we got to get braced for, because I think I told you months ago, eventually that will change. This is going to happen. They got to stop getting off this Fed pivot stuff and stop trying to run us up. Now, if we do sell down eventually back to the bottom of that channel, I almost guarantee you're going to hear about Fed pivot again, right? Because that's the narrative they use. The last two rallies, I think, has been the Fed pivot. And so even though they changed the definition of pivot, and so, no, and of course, everybody's come up with their own definition. I've seen other people out there, veteran traders and investors, saying, well, yeah, a pivot, it don't have to be them cutting rates. It can just be them slowing down. Yeah, that's what it can be. Because, you can convince yourself of anything, right? And if you convince enough people, then you get to move the markets. But another thing I was noticing, and I had to bring this up because usually 3 times a week, if not more, I'll sit there and I post like swing trade or trade ideas and stuff off charts and stuff. And I'm sitting there looking at this and I said, okay, here's the Chinese stocks, right? And so here's some charts, and it said, Chinese stocks may be getting ready for a nice pullback. FXI, which is a large cap ETF for a lot of the big Chinese stocks, like BABA, have had a big run. Might be time for a breather with this breaking out of this rising wedge, and the MACD looking like it's going to roll over on the daily. And if I click on this for you so you can see it even more clearly, you can see there it is, right? It's falling out of this rise. It's breaking down this rising wedge. MACD is getting ready to roll over. RSI is trending down here. And then if you look at what this ETF holds, you can see it holds all the big boys, right? You got Alibaba, Tencent, Baidu, JD.com. And then when you look at what's going on with BABA, same thing, right? Rising wedge, boom, breaking down. RSI is folding over, MACD's crossing. And then all of a sudden this morning, I see Chinese stocks pop. And I'm like, so I go in Discord, I'm like, wait a minute. And so I post this on Patreon Discord and say, I've noticed over the last couple months, if Chinese stocks start to pull back or look at all bears from the charts, you get these same old headlines that have been posted multiple times in the past 60 days to pump the stocks back up. Maybe it's just a coincidence. Anybody have thoughts? But here's the one that came out this morning. Chinese stocks dodge delisting as U.S. gains audit access. But the problem is that same headline we already talked about last month. That's when they started to pump them in the first place, right? And then if they start to roll over, all of a sudden they'll say, once again, how many times have you heard this story? They're reopening. They're cutting back on COVID stuff. Keep pump. right? I mean, it's like it never fails, and this is why I don't. I mean, I'm looking at it and I want to play puts on or this and the other, but like I said, and try to invest in some of this stuff to trade it, but man, they just now it's starting. There's this saying coming around. I see it on the internet now. It's saying Chinese stocks are doing what Chinese stocks always do. You know, where they just look crappy on the chart and they're going to roll over. Every stock does, and all of a sudden, here it comes. Here comes some article out about the reopening. Woo! Oh my! What, they ain't gonna get delisted? You know, I mean, how many stories have we got to see about this? You know, so keep that in mind. Next time you start to see them start to roll over again, wait for the whole, you know, here comes the articles out again about the reopening, the strong economy, and the real estate market's back on track. Yeah, right. And, oh, my God, they're not going to get delisted? You know, and so I don't know, maybe it's just me. Let me know if you've noticed the same thing. But, I mean, I'm a news junkie because I run this channel, so I'm constantly you know, bringing in news to give the members, to give to you guys, to give to me. And so I know I've seen these multiple times. And so I just wanted to see, you know, I'm not a conspiracy theorist, but I know I've seen these articles come out multiple times. Every time these stocks start to take a breather, never fails, right? And so they're keeping them pumping, whoever's doing it. And, you know, I talked to you guys the other day a little bit about Citadel and Dartpool and all this stuff. And, I mean, this is, you know, there's no such thing in this country as a monopoly anymore or anything else, or open, you know, fair markets or free markets. But, you know, tell me this is not a problem here. And this is, the source of this is Citadel themselves. This just came out last night. Citadel Security share of individual investor stock trading volume, which is us. And look at that. Even though with decreased volume, they still hold 38%. At the peak in 2020, they held 45% of all our trades. So that's one company, for God's sakes, right? That's paying for that order flow. And supposedly there is some bill or something trying to stop this because you can't have one company 40% of all individual basically trades there. I mean, one company, right? And they run the Dartpool. They have a trading platform. They pay for order flow. I mean, that's nuts. And I did a video, was it maybe a year and a half ago, about it was like just 5 companies that basically hold all of it. Just 5. I mean, it's amazing how much of the market they've cornered on this. And again, I always say it's like, I mean, there's no way for them to lose, right? Because, like I said, it's like them playing poker, right? And they can see your cards, but you can't see their cards. I mean, how do you lose? You don't, right? So anyway, just want to put that out there to you. Monday, you know, like I said, next week at some point in time, we're going to get a bounce. You don't get all red days like this. And there is a lot of stocks that are oversold at this point in time. A lot of stocks hitting new 52-week lows, which usually they get a bounce, you know, and stuff like that. And I still say the market is setting us up for some kind of Santa Claus rally. And, you know, that's just the way it is. I'm going to be, you know, sending something out, the pictures out to the members. I already did a video on it. Another one will be doing tonight for them. There's another thing we got to think about here, which affects 2023. And I meant to say this earlier, was what's going on between oil prices and oil stocks and XLE, right, the ETF. Because oil prices, from 130 to where they're at now, they've just been crushed. What do you see oil stocks doing, though? I mean, what 3 weeks ago, they're setting all-time new highs, one after the other, right? And so, in XLE, they're curling over, but not like oil did. And I went and did some research on this, and this happened one other time in the last 30 years. Go look at your charts, watch how long it lasted, and that's the big question, because you still got the big firms that they're recommending to play these oil stocks and to play energy. And I'm like, okay, that's interesting. I don't, you know, and when I looked at the chart, this can go on for a while, guys, you know, and so be aware of that. But that's throwing a wrench in things, because normally the S&P bottoms when oil stocks roll over and just get crushed. But that happens normally when oil rolls over too. But it's not happening right now, right? So just food for thought, all right? So hope you guys have a good weekend. Hit the like and subscribe button if you got anything out of it. And I'll see you guys Sunday.